So Saturdays are my favourite trading day of the week. On Saturdays, you get all of the major sporting events, and major sporting events create big betting markets, and big betting markets tend to create good trading markets. However, some people don't like Saturdays, and in fact, some Saturdays are better than others, and that's what I'm going to explore in this video.
So I often get a lot of people saying that Saturdays feel different when they're actively trading. Some people love Saturdays, some people hate them. And the fact is, I love them and hate them because during the flat season, I love Saturdays. They are the best markets that I will trade throughout most of the year. But during the jump seasons, I'm not so enthusiastic about it. And I can show you why if we have a look at Guardian. So I've got today's racing that I'm actively trading at this moment in time. And you can actually see on here a list of the races and the timing between races. So obviously I'm quite keen to trade the 15:38 at Ascot being the feature race of the day. But you can see here that the current race is underway at Ascot. It's just short of 2.5 miles. That will take a little bit of time to complete. Then we move to Lingfield at 10 past. Now, as it stands, I can look at Lingfield, get an idea of what I want to do. But one of the problems we've got here is you can see the volume at Lingfield is absolutely awful. I was going to say something else then, but I'll paraphrase it. It's awful. It's 1/10 of the volume that we've got at Ascot at this particular moment in time. And therefore, you can see the amount of average stake that we have within the market. It's relatively low. I can't put decent sums into the market. And if the market starts to move, then that creates a bit of risk for me. So, if I have a closer look at Lingfield here, we can look at the individual characteristics of the market. You can see that there's been a fair bit of movement on the favourite. It's at the bottom end of its trading range and all of these sort of wonderful things. But look at the amount of money that's available. If I put £500 into this market, I'm going to struggle to get £500 out in a sort of safe manner. So I'm going to have to lower my stakes. So what are the options that I've got here? Well, I can wait for the money to build up, but I already know that that will only really happen when Ascot finishes, because when people know the result at Ascot, there'll be more money arriving into this market and it will sort of begin to sort of bloom effectively. But you can see because of the lack of money here, this increases the amount of risk that we've got within the market, because trying to put a trade in and out of the market is a problem. And also, if we watch what happens, the Ascot race is about to finish now, you'll see the money begin to arrive. So there's a certain structure and things that we can learn in this market, so we can tell that the favourite is on a slight drift. We can see that the price on the third favourite is coming in and so on. That effect will exaggerate itself now that this Ascot race has finished and people start to make a decision on what they really want to do at Lingfield. So this basically gives us a window of about 3 and a bit minutes to be able to actively trade this race. So we do have opportunities here. The market will go through this moment here of activity, and then we can actively trade it and the money begins to build. But can you see we can only really join the market at or around this time, so we have quite a limited window in which we can actively trade, because if you make a mistake you want to be able to reverse it quickly, which is a key way to limit your losses. You want to be able to get out of a bad position, but if the money isn't there, you won't be able to do that, and therefore that increases your risk. So I tend to wait for all of the conditions to be correct before I start actively trading. And when we're looking at the jumps racing, typically in the winter, that window of opportunity is narrower for me. I have to wait for longer for the market conditions to meet what my criteria typically is to be able to reduce my risk when trading. And therefore, when we look at a Saturday in the winter when there's lots of jumps racing, the key problem that we've got is this lack of gaps between individual races. So we look at Lingfield, it's only 5 minutes in front of Haydock. Hopefully Lingfield goes off in time, but it's a 1 miler, so you can see we're only going to get a couple of minutes max at Haydock. Haydock goes off, it's a 3 miler, and then we've got Wincanton 5 minutes behind it. So it's very unlikely that Haydock will go off time, and it's very unlikely that they will be able to complete the race and go off on time before Wincanton starts. So the opportunity at Wincanton is restricted by that. When we look at the feature race at Ascot, there is an 8-minute gap between that and Gowran Park, which is not ideal. Irish racing really shouldn't affect the UK racing, but it does. But can you see that that pattern repeats itself throughout the card? So the problem is I am going to get less opportunities on a Saturday. They're going to be in a narrower window with less favourable conditions, and therefore the amount of trades that I can do and the type of trades that I can do are sort of somewhat restricted by that. But when you look at the summer card, when you get flat racing and the races are over very quickly, that's really not a problem. So, you know, that explains one of the key reasons why the card trades differently and feels differently, especially on a Saturday, but also especially in the winter. So we can see here that Lingfield did actually go off late. We had no idea of that. So this may have presented an opportunity. Of course, you can't tell quite how the horses are going to load. But of course, the problem we now have is it's a 1 mile race. Are they going to release them? They are. It's a 1 mile race. It's gone off at 15:13. And we've got the next race at Haydock at 15:15. So we basically have a 1 minute and 10 second run in to this particular race. The volumes are pretty low in terms of what you can see on the ladder, in other words, what's safe to trade in and out. And if you look at the overall market volume, it's absolutely appalling. So this makes this a very risky trade in the overall scheme of things. I can only use small amounts of money, and I'm going to have to get into the market and out of the market fairly quickly in order to keep my trade within a safe boundary effectively. So yeah, you know, you would trade these markets completely differently. You wouldn't expect to trade these the same way that you would do a fully liquid market with a good run in and big gaps between the races. And, you know, this is a problem for racing, I think, because as a betting heat, you're much less likely to be able to get good money on an individual race. Look, can you see the market is suspended? In fact, I think there has been a withdrawn horse here, so it gets even worse. So as a consequence, when you look at these markets from a betting perspective, they're just really messy. So I can't imagine many people would bet on them. They probably can't see them anyway, but they don't make for very good trading markets. They make for much riskier sort of trading markets, really. So the sort of trades I'm likely to do in these types of markets, we've got a limited amount of time left, is to just sort of nip in and out. We're looking at a listed race here at Ascot. The market's acting quite smoothly and in a sort of reasonable manner. There's reasonable amounts of money available here, but we've got very limited amounts of time. So in terms of risk, you would necessarily sort of rank this as a much riskier trade. What I tend to do is score my trades in a certain manner from 1 to 10, and then basically there will have to be certain things in place. So nice big gap, lots of money coming into the market would be points that I would put on this scorecard. And then basically the lower it down the scorecard it is, the riskier it is, and I'll adapt my trading as such. So what I've done here is I've offered some money to the market at 7.6. I haven't taken money out because I don't think there's going to be enough movement in the market to be able to do a decent trade. So what I've done is I've offered some money out there, and when I'm putting the closing trades in, I'm putting them in very close to where the current price is. I'm basically putting in both orders at the touch price. And that is because the price isn't going to move much in the amount of time we've got left. We've got a very limited window of opportunity here. So I basically have to just nip in and out as quickly as possible so that I don't carry the trade towards the in-play period. So this is the sort of way that I'm likely to trade when I have limited amounts of time and liquidity available to me. I don't want to put too much at risk, but I'll basically trade as quickly as I can, usually just one tick apart, and try and grab a little bit out of the market. So on this occasion, I've managed to get £11.27. It didn't take very long to do that, but I considered the risk to be just that little bit higher, which is why I was trading right near the touch prices at the front of the book. But yeah, when there's limited availability and time and liquidity, and I consider the trades to be much riskier, this is pretty much the way that I would expect to trade.